Hi everyone, it's Stuart here again. Sorry, I'm a minute or two late. I think yes, 2 minutes past the hour. Sorry about that. So, good morning, good evening, good afternoon, wherever you are in the world. Welcome to thePropTrade.com and our latest little education video. I've actually got quite a lot of slides tonight, so if I go on too long, please tell me to stop because there's loads of stuff in Fibonacci, and I'm covering what it is, the background, extensions, clustering, and that's enough. There's loads and loads in Fibonacci you can use. There's arcs, there's squares, there's all sorts of stuff. Yeah, Fibonacci, one of my favorite retracement tools, or the key favorite of mine is retracement tools. So we'll have a look at that in a bit of detail. And it's all about trend analysis and trending, and when there's a trend, not a trend, when there's a trend over, when there's a trend not over. And I think it's quite applicable to what's going on currently in the markets. We had a huge bounce today in the stock markets following 3-4 days of capitulation from last Wednesday. Dollars weakened again. So anyway, let's just concentrate on the event in hand. So the art and power of Fibonacci trading, I've called this. I say there's 30 odd slides. If you get bored, obviously drift away, watch it later, watch it in bits, but there's quite a lot of stuff in here. I go back to basics to start off with, as ever, because I think it's important to that we understand where it's come from and how we can apply it to our trading and improving our trading. And there's some parallels with the current trends in the market. And when I say trends, I mean types of trading approaches around order blocks and volume and stuff like that. Anyway, this is me. I've been around for a long time, as you can probably tell from this video. And the forehead's got bigger than that when that photograph was taken, hasn't it? So, but never mind. My approach to trading has always been the same. Once I found my niche, it was all about do something that's probable. If it's probable, keep it simple, and look at the time frame that fits you as a person, as a trader, as an investor, depending on your approach. And most importantly of all, know yourself. This is a risk management game. You need to understand yourself. You need to understand your approach to risk, your ideas about what you consider to be patience, what you consider to be persistence, what you consider to be discipline. The markets are relentless; they don't stop. And obviously, as technology has moved on, they're available to risk your hard-earned capital 24 hours a day, and now 7 days a week. So it's yours to speculate, to do what you will with, but the markets will take it off you at the bat of an eyelid. They will also give you it back at a bat of an eyelid as well. So know yourself and do what's probable. Keep it simple. It's all in the numbers. So today we are going to cover quite a extensive range of things I want to try and cover today. So it might drift on a wee bit. So where did Fibonacci come from? Why is it important as far as we're concerned as traders? Identifying a trend, where a trend starts, where a trend ends. Is this a retracement, or is it just a pullback of a continuing uptrend? Fibonacci can help you with all of those sort of things. The beauty of retracement levels. We'll then look at Fibonacci extension and extensions, multiple extensions. It's all in the numbers, it's all in maths. And now we'll look at something called coalescence and the clustering of Fibonacci levels, which is really quite powerful. It can look quite complicated. I was just looking at some of the later slides. It might look quite complicated, or it does look quite complicated to the uninitiated eye. But if once you start applying the rules and applying the same philosophy, you'll start seeing this repetition. One of the big criticisms that Fibonacci traders get from general compatriots is that because it creates 5, 6, 7 levels. Well, these lines, these horizontal lines that Fibonacci creates, they're bound to get hit at some point. They're bound to get touched. So what's the point? It's just levels. I like using it on an ad hoc basis sometimes, just to confirm what you may be thinking, or what you may think you can see on the chart. I mean, when you get Fibonacci levels coalescing and clustering, like point 4 is talking about there, with themselves, but also then with other indicators, things like moving averages or MAC levels or whatever it is, MACD levels. It becomes, that's a bit more interesting. The more you do it, the more, actually, yeah. And that's another criticism that Fibonacci gets, is that it becomes self-fulfilling. But anyway, I'm a fan. Let me show you and explain what we're going to go through today. As I say, there's lots of other stuff, Fibonacci, as I say, time zones, fans, arcs, and channels. We're not going to touch that today. It gets a bit more complicated on that. But if you want to take it further, there's plenty of literature on that and pointing in the right direction of that if you're interested. So the basics sequence, number of, it's a mathematical formula, sequence of numbers. Each is the sum of the two preceding numbers from 1 to 0. So the beginning of the sequence is 0, 1, and 1, 2. So 2 plus 1 gives us 3. 3 plus 2 gives us 5. 5 plus 3 gives us 8. And on we go. Okay, the Indians were first, on the Indian subcontinent 200 years before Christ. Was when it was first, or the sequences of digits of numbers going back to the Indian subcontinent. But the guy that's given his name to it is Leonardo of Pisa. He's not actually called Fibonacci, but he was called Bonici, son of Bonici. So that's where Fibonacci came from. That's his nickname, son of Bonici. Leonardo of Pisa, and here he is, smiling out of the camera as all here. And his perhaps most famous arc is the Fibonacci arc, and we'll come on to that as we explain it. And this is when he brought it from India to the West in 1202. But as I say, there are signs of it many years ago. So what he was interested in was what appeared to be the exponential growth of rabbit populations in his native Italy. And if anybody knows anything about rabbits, there's the old saying in English about breeding like rabbits, because as things multiply. So Fibonacci sequence goes up very quickly. So you can see here why we're into the just less than 10 numbers in the sequence are already into the hundreds, as and it goes on forever, because 144 plus 233 equals 377. That's the next Fibonacci level, or next Fibonacci number. So Fibonacci, it's very ancient, but first formulated and then started to expand in the 1300s, the 1200s, the 1300s, the 1400s, as the Renaissance started to grab Europe as well, and then it sort of literally mushroomed, but it went up exponentially. Its interest in all sorts of areas of the world, from nature to all sorts of things. So it can be connected to economics. Lucas theory is all about Fibonacci. Random number generators use Fibonacci links. Poker players have been known to use it. Converting miles to kilometers uses 1.609. It's one of the Fibonacci numbers. We'll come on to that in a minute. Optics, music, nature, it's everywhere. If you go out into a wild field, you will see the Fibonacci sequence in biology all over the world, wherever you go, whether it's in trees, leaves, stems, fruits, whatever it may be, and all different fruits we see. And I've got some examples coming on to next. And also mathematics, and therefore that's how it sort of drifted in to technical analysis, financial markets. But really, its explosion, its popularity was in the natural world. So the curls of a shell, the fingerprint on your own hand, the length of your body, the way your body's broken up, fits the Fibonacci sequence. The swirls of a hurricane, the curves of a wave, the seeds in a sunflower, the curled up baby in a fetus, all fit the Fibonacci time frame as we move out, and you'll see the Fibonacci curl. What I'm talking about is the Fibonacci curl is, if I just go back a second, sorry. This is what I'm referring to. So this is the 1 + 1 is 2. 2 + 1 is 3, and then we got 1, 2, 3, 4 here, 5, and this is how we expand out. So how the Fibonacci sequence is built up. So 5, 8, 13 degrees to the bigger. So we're using the previous numbers in the sequence to create the next numbers, and then so it goes on. Then the Fibonacci levels, which we're going to talk about in a minute, are created by breaking or jumping the sequence as we go forward, and more on that in a little while. So it is literally everywhere, and probably the most famous one currently is the Apple logo. Fits the Fibonacci, or was designed by Dan Ives, the English guy behind lots of the designs within the Apple Corporation, as the how big is the bite? People say about the bite out of the apple, and that was all down to the Fibonacci sequence. Toyota had already done it as well in their logo many years ago. The golden ratio, this 1.618. Not 1.6, not 1.62, but 1.618. We'll come on to that in a minute, how we created that. The famous Mona Lisa, I've already said about the hurricanes, fit the fib arc, the hand, the face, the body. You've seen the famous Leonardo da Vinci picture of Christ. I haven't got that as an example here, but you know, the perfect face fits the Fibonacci logo, and it is absolutely everywhere. And when I say everywhere, I mean everywhere. The man of the moment, you know, there we are. There's our Fibonacci arc around our man of the moment. So it's everywhere, and there's absolutely no reason why it can't fit into the financial markets, and it does fit really nicely. So we have got our number sequence. So a retracement, technical indicator derived from the Fibonacci sequence. The idea behind retracements, a market will move. We talked about this yesterday, didn't we? We talk about this all the time, about the movement of waves of the market. Market never goes in a straight line, it has energy. To get energy, it needs volume. It needs buyers or sellers dominating the other side. So we have a movement, but that movement of energy can be sort of predicted to an extent, and that's what the Fibonacci sequence tries to do. So once we've had a surge in one direction, the retrace might go to a certain level, and that's what Fibonacci retracements are all like. So it's a predictable proportion of the move down will continue until we find a level that's everything's comfortable with. So the ratios, the way we create the ratios on the Fibonacci sequence are the rules down there at the bottom of the this particular slide here. So the ratios are created by adding the numbers together and creating it. So for instance, the first one, or let's actually start with the numbers. If you add the numbers together and divide them, you get the first number in the sequence, the 23.6 of the movement. So you've got a movement from 0 to 100, and then you apply the Fibonacci sequence, adding the two numbers together and then dividing by each other, and you'll get a movement or a retracement of that initial leg, that initial wave up, that movement, the initial strong energy of 23.6. If you then, the next level you get is the 38.2, and this is found by dividing the number in the sequence two places to the right. So if we divide 55 by 144 here, so we've gone up the sequence to 144, we go back, we got to 55 and we go divide it the other way around, don't we? We're going up the sequence. So two places further up, so 55 divided over 40, 55 divided by 144 gives us a ratio of about 40%, or actually 0.382 or 38.2%. So that's why we get the 32.8. 26.3, we've just done that one. That's three places to the right. So 8 divided by 34 in this example, as we're going up the sequence, gives us 26 0.3. The most important one, both in Fibonacci, in pure Fibonacci terms, but also in apply Fibonacci to the financial markets, is the golden ratio. As we saw in the designs on the top design, the logo, the Apple logo, the Mona Lisa, the hurricane, the sunflower seeds. The golden ratio is a division of any number in the sequence by the number next to it, gives you this 0.618, or around about 618. So if you don't believe me, tick any of those numbers and the number next to it, and we get a ratio of 0.618, or roundabout, very, very close to that 0.618 or 0.62. I know people round it up or whatever, but it's used for all sorts of things. So it's used for targets, it's used for stop losses, it's used for turns in the market, trying to predict swing highs and swing lows. But it'd be amazing the amount of times you apply a Fibonacci level and, a Fibonacci level retrace indicator, and you'll be amazed at the amount of times the 61.8 comes into play. Now then, those of you that are a bit sharper, have used Fibonacci before, might notice one missing. Okay, what doesn't fit in the true Fibonacci sequence is the 50% level that you see all the time on your trading charts. That was because technical analysts, as usual, thought, actually, half a retracement level of a move sounds like a good number to us. And then when you look at other retracement tools within technical analysis, you see there's quants, so that's quarterly retrace, so 25, 50, 75 of a move. And so that was imported into the Fibonacci level. So a lot of the Fibonacci software indicators you see, or bits of software you see on charts, like on our trade locker chart, like on TradingView, even on CTrader and MT4 and MT5, will have the 50% added to it as well. The other key level that's not in here that a lot of the American indicators use will be the next level up, which is 76 level, which I never used when I started using Fibonacci, so I don't talk about it. But again, on many systems, and again on the TradingView platform, you can get the next level up as well. But as far as trading's concerned, the three key levels to focus on are obviously, once you've established there is a trend and it started and it stopped, we'll come on to that in a minute, are the 50, 61, and the 38.2. So the middle ones, if you like, the 61.8 being the key one, still being the golden ratio, golden ticket, if you like. That's the one that many long-term investors will use as the key turning point of a giving up a move, and we use that also. The 61.8 is key when we're looking for at extensions as well, and it's already 20 past the hour, and I've only got on to slide I don't know, of not very many of 33, so 9 of 33. So I'm trying to keep this to an hour, but we may have to do this again and do it in 2 parts or something. So key thing about Fibonacci retracements is that you need a trend first. So how do you identify the beginning and the end? All of Fibonacci is doing, it's like any technical analysis tool, it's just another tool in your toolbox. It's just measuring the trend, but you've got to establish where the trend starts and ends. It's only when the trend is over can you measure it. And again, a lot of criticism around Fibonacci, or people blowing up when they've used Fibonacci, is that the trend actually wasn't over when they put their Fibonacci level on. So many people might be doing that today, literally as we speak today, as the stock markets have bounced quite significantly today, for instance. Is the decline from the February high, the 20% decline we've seen in the Nasdaq, is that over now? And many, absolutely, thousands, I'm sure, if not more, technical analysts, professionals, and retail traders over the world, tens of thousands probably, will have stuck their Fibonacci levels on the bottom from the top from February, the bottom from yesterday, as we've bounced quite aggressively, trying to see where the bounce might go to. Yeah, is it over? Who knows? But yeah, that's the key thing. We'll only when we've established that it's definitely over can it be measured. So as I say, it suffers from the same drawbacks as other tools. It's only as good as the user, and it's only as good as some other tools you can use. So obviously, I mean, I'm stating the bleeding obvious here, hopefully. It's the trend starts, the trend ends. So that's the start, that's the end. It's an uptrend. So we measure from left to right going up. In a downtrend, you measure from left to right going down. So left to right. Oh, you're looking at me the other way around, aren't you? But that's the downtrend. And we only know that was the top once it started going down. And we only know that's the bottom once the price action started to go up. So we never know. We've got to make sure that the end of the trend is over before we can apply Fibonacci tools, or we can apply the Fibonacci tools, but just bear in mind all it's doing is measuring. It's not an absolute tool. So there we are. We're measuring from a downtrend. We go from 0.1 left to right. So we put it on here. It's pretty clear that, isn't it? That's gone all the way down at the moment because we've put this on here 1 to 2 at this point. That's what this is telling us. If we put it, I mean, you would have quite understandably put perhaps it on from that very sharp, very rapid decline. If we put a 0 on here, it's bounced. This is the 38.22, and there's the 76.4 level I was talking about before that I don't use potentially, but again, used for areas where the market might go to, areas of resistance as we move up. We could set a target for that. So here we've got a big leg move down about this level. We've had this move up here. Again, it doesn't matter what time frame this happens to be the 4-hour chart. We'd had 1, 2, 3, 4, 5, 6, 7 candles. So a whole when the bottom was created here before you could really think, oh well, that probably is over. Because at this point here, you probably think, oh well, that might be before it goes down, but it just doesn't go any further. So yeah, you're quite comfortable to have that is the current floor. You'd have done a similar thing here. It was a false floor, and then it went lower, then it went higher, but it went. So it's an art as ever. It's not absolutely exact, but that's what you want to be looking. You want to be looking for a clear a trend, or you establish the trend is over before you can start looking at potential drawing the fib levels. But as you can see here, obviously this has been drawn once that's been established, but this level had already been a price level had already been established, and it might be around a key number level as well. These are just levels, so it could be, is it a big whole number? Is it a 121 level? Is it a 122 level? It's saying 122 something there. So this is the first one, and it's not really playing out. There's our 38, there's our 50, there's our 61. So at this point, there's still a long way to go to take back this big move down, but there's been a lot of consolidation as that price has moved down. So that's downtrend left to right, fib level on to the down to the bottom. So I've got lots of few of these. Similarly, uptrend supplying a support level. So that's the first leg. Is it over? Well, by the time we got to here, probably, yeah, we're happy to put that on. So we've started at 0, the bottom of the, and we probably could have gone there, but there's our level, there's our end level, and we've moved down, but this has provided support. We didn't even get to the 38.2, the less significant 23.6 level has played out as a support level here in an ongoing uptrend. Okay, so the uptrend didn't break down, it didn't retrace, it got nowhere near the 61 or the 50 level. It didn't even get near the 38 level, really, did it here? So it's acted as a big support level. So it's acted as support in the uptrend, and you saw on the previous slide, it was acting as resistance to the stronger downtrend level. So we're using it there to confirm our continuation potentially. Here it has actually continue. So again, left to right, we didn't retrace. The first fib level held, and it held for quite a while, and then it broke out and it went to the upside. The uptrend continued. This happened to be, I don't know if you can see that. I hope you can see that on the charts. This happens to be, actually, if I make myself small, you should be able to see the, there we are. You should be able to see the charts a wee bit bigger. Should we get rid of that? Let's get rid of that because we, I don't know what I've done there. I've got rid of that was not, oh, I was just so see the whole slide. Sorry. What was I saying? Yeah. So this is provided a support level. Has that actually made it any bigger? I'm not sure it has, to be honest. Anyway, some slides. You know, as I've just said, they don't always work. Obviously, there's no simple answers, but you know, hopefully those points I've shown you will give you an idea about trying to find a start and an end. So we got to, in summary, basically, you've got to find a trend, a start and an end. The retrace, this is the key thing that lots of people get confused with, or won't accept the limitations of the Fibonacci, and don't appreciate its powerfulness. The retracement, by definition, must be underway in order to measure it, because that's all the the Fibonacci retracement is doing. It's measuring the retracement, so it's got to have already started before you can measure it. So therefore, you'll never catch, you know, the top of the trend or the bottom of the trend. It's got to have already turned before you can measure it. The retracement is not underway, it has not started, and therefore there's nothing to measure. Again, it seems fairly straightforward, but a lot of people get confused with that. Like we saw on the perhaps on the first slide, where we'd not this one, this yeah, this first chart here, you know, you could have quite understandably and quite legitimately here, this is a 4-hour chart, you know, put the fib on there and seen what the retracement level, this would have been a better, stronger retracement, but it's rejected it within a candle. And look at this candle formation of the one that rejected it. It was a big engulfing candle of the previous, you know, three of the green candles, wasn't it? So it's a big rejection. That resistance, therefore, even stronger, as we were mentioning here on that. So the down leg wasn't open. You might have then had another go at this point here when we started moving up again, and it still wasn't over. At this point, you know, we've had an exhaustion of sellers, rebounds, and then another leg lower though before the real exhaustion, what looks like the real exhaustion of sellers has been fed out. But by then we've already got back to here, and it's taken quite a while, hasn't it, compared to the retracement we saw here and then here. So yeah, it's, you know, it's an art, as I say, it's an art, but the power of it is still very, very significant. So if the retracement is not underway, there's nothing to start and there's nothing to measure. Okay, so just as we saw in an uptrend and a downtrend, we need to, you know, it can help you with sort of correct some levels within the shorter time frame. So yesterday we were talking about multiple time frame analysis. So in this situation here, this particular chart happens to be a daily chart. So here we got a clear down leg, even if it was just, we've gone all the way to this one here at this point, but even if we'd done it to this first retrace here, what these levels, these numbers here represent a potential short entry positions given the strength of the down trend. So we've had a big continuing downtrend. We've moved down, retraced, significant down, significant retrace, more significant down level. Don't know that that's potentially over yet. A more significant retrace and bounce, but it's, you know, the overall trend, if we look at all this continual time here, has been from a high up here to the low down here, and when we're as we finish this snapshot of the market of this particular asset on this particular time frame, you can see that the trend is still to the downside. So these retracement levels, these Fibonacci levels, the 38.2 as it is here, and the 50 level, provide entry levels to go short. Okay, so you could be using, you could use this daily time frame with this fib level on, and then use your shorter time frames, the 15-minute or the 1 hour time frame, to when prices get to here, could take a short position. Obviously, it would have failed here 4 days later, but worked out at the next fib level and a few days later, and that worked out really nicely, didn't it? Short and then short again. It's retraced to that level. That short wouldn't have worked out, but with the short at the 50 level worked out twice. So we got a double top here as well. We got bigger negative candles and positive candles, and it completely collapses for the final leg to the ultimate drop down level. So those levels that we've marked on the chart there, 1, 2, 3, 4, all potential short positions as the price, the fib level rejection levels. So you can see. But again, you would question, this really should be at this level rather than all the way down here. But this is the total move, and obviously these levels have already played out anyway. So it's a bit of in hindsight that one, but this would be our bottom level. Okay, so downtrend, similar action here. So this is our initial leg down. That was on the 4 hour. This is the daily Aussie on the daily. So that's our first down. As our fib levels, left, right again, top to bottom, 100 to 0. We bounce. Where do we fail? We fail at the 38 again. We then look at this point, obviously, it looks like we're going to break lower. Certainly after this candle, after this day candle here, it looks like we were going to make new lows, wasn't it? And this level was long. And then all of a sudden, within 4 days, we've turned around. We've gone back to our initial fib level. So again, a possible short entry there. The next 38, which worked out nicely here, 1 didn't work out, but we did get within a smidge of 50. So that short position there has worked out. Then we broke it. And then we got to the key golden ratio. Remember, it carries more significance than the other levels. And what happened? The total capitulation thereafter. Obviously, at this point, it looks like it was a wave up, didn't it? But it's Elliott wave analysts would say, there was 1, 2, 3, 4, 5, A, B, and down here where we currently finish out the bottom to a new low level. So again, these are potential short positions with the overall downtrend driving that at the high. And again, use the lower time frames that we talked about yesterday for potential short positions on entry on the higher time frame key fib levels. Similar way around in an uptrend, it's just turning it on its head. So again, there's our initial fib range. It's given it all the way back. So we even went beyond this last leg here. So that's our last fib indicator. So left to right again. So we've retraced again to 38 this time, reaching out at 26 again to 38, then bounce. Then we break 38, we go to 50. Then we get to 61. See, it's an inverse of what we've just seen. So these are support levels, and then a big rally from the big 61.8 retracement to the upside. And creating 1, 2, 3 new targets, bit of a retracement which failed. So that's a really key one as well. So you might be buying here, buying at the new high, and off we goes again to the new high. So it's how you apply it, and what's the overall trend. So the overall trend here was down, then it's up, and it's remained up because it hasn't retraced significantly or sufficiently to breaking the 61.8 this leg down here to say that we're now back in a downtrend. So we're still in an uptrend until that 61.8 level has been broken. Similar. No, that's the previous. We've done this one. Have we done this one? Yeah. Yeah. So again, similar. This happens to be in the 4 hour. Is that the yes, different asset. So again, first leg retrace 38 again, then 38 breaks, takes to 50, but 50 didn't. So we didn't bounce from 50, did we? We moved down to test 61, but then we took out both 50, 61 and 50 and took us back to 38. So that, potential, it could have easily, obviously at this point, 0.5, you don't know whether we're going short or long, but the break was to the upside, so we'd add to our position here and look for the third move to the third high. It's duplicate of what we've just seen, isn't it? And then to another leg higher. Okay, so that's retracements. We've got some more of that in a minute when we come back to looking at the clustering tool. So it's fairly straightforward. If I just bring that, let's just bring that up to date. I just bring in the current markets. I did this earlier on the for the stock market. So the Nasdaq, for instance, I just put this on earlier. This is the hourly chart. We've got the daily chart. As I was saying before, we've had this big all-time high here at the middle of February. We had this leg down, so we could have comfortably had a fib level here. See how the bounce went. Didn't play out, and it's leg down, and we've had this almighty sell-off from last Wednesday. All the technical levels getting sort of tested and thrown out of the apple cart, and with the Trump tariff reaction to, or the market's reaction to the Trump tariff scenario from last Wednesday. Yesterday we had a huge, Friday we had a huge sell-off. Yesterday we moved down initially. It was all over the place, very volatile, but then had a big move up, and we were up last time I looked at this earlier today. But again, we were over that 18,000 last time I looked at this properly. But as you can see here, we're now back to 17,400. So is this, I'll put in here 16,350 yesterday. Is that the Trump tariff low? Maybe too early to tell. But if it is, the fib levels are in play around other key levels. So what's it's producing? Well, it's producing a 50% retracement level around about here at 19,002. It's above the key round $19,000 level, and the 38 comes in at 18,000, around about 18,600. So that's the key level we need to get to. Yesterday when it bounced, and earlier today when it bounced, it went through the next round number, which was 18,000, but it's given it up on both occasions on an intraday basis, so suggesting it's intraday volatility. The uptrend, the downtrend is far from over, or it's far too early to say that the downtrend is over. And remember the 61.8 or the 0.618, the 61.8% retracement level from the all-time high would need to take us back to more or less 20,000, so 19,976, just shy of 20,000. So that's what techies will be looking at if they're holding any credence that this is the bottom of the market. It's far too early to tell that yesterday's bounce, although it was very significant, is that. And again, you see all the gains we've had earlier today are being given up at the moment. 17,500 is where we claim. So that's the nuances playing with fib levels. We'll do more on that later. We've got time. We should have time. There we are. What time is it? 20 minutes to the hour. Right, fib extensions. A fib extension is a little different to retracements. Extensions should be used just for target settings. It gives you a potential target level. So we've had our run, we've had a bit of a retrace, and it might then bounce higher, and the calculation takes us to the multiples that we're using. So we get a fib level, A to 1 to 2, or A to B, as we show on the initial leg, and then we need a retracement to C, and then we put our extension tool on from C. So we get A, B, C. So we start our extension tool there, and you can see on this particular example here, it's a short-winded one, given that was still in. I would argue that was still in motion, but These slides from a colleague of mine from a while ago, as you might expect. So you can see so there's the A, B, C. There's the retracement floor here, and then extension takes us to 161, 261, 461 as well. The tool goes on. We can use it. We can show it in the trading view platform as well, to provide potential target levels, and that's all you should traditionally use the fib extension tools for. So we're looking for a move, a retracement, and then a potential extension to the upside. So it breaks the retracement like we had on the other chart. Whoops, we had on the other charts. So where we've got here, we could have done so this could be our 1. So this is our 1, 2, 3, or our A, B, C. So we put an extension tool on there here to give us an upside potential target. But obviously what happened didn't happen straight away, because we went much lower and you were being stopped out initially. But again, so you could have done 1, 2, 3 again there, or you could have just done 1 and that's 2 there, or even at this point, because this has been tested 3 times now, this could have been 1 to here, 2 to here, and so where's the next retracement? Well, it doesn't go low enough, so or we do 1, 2, 3, and the fib expansion. Sorry, I keep saying extension. I mean expansion. Extension could go from this level here. So this is 1, although we've hit it twice, and the low is in here, but obviously we don't know that till we. This move is moving to the upside and breaking these other levels. So we then extend and look for the expansion tool to take us higher. And again, the overall uptrend is playing out. So again, this is we got this last leg. If we've gone to this level, retrace to C, and then the extension takes us to 61 and the 138 level as well. So the 150, 130. 150, 161, 138.2 levels become our target levels. And again, the retracement was back to the 50 level, which has happened to be our B level. So that's confirmed that we did it once, and then twice, and then the target. That was a comfortable next leg to the upside. So that was an uptrend or a downtrend. This is an uptrend move. By extending the extension tool from point C here, there's a leg that there's that move, still movement, and it gives us these targets to the upside. Downtrend, it's a blown up image of what we've just seen in the previous 2 slides. So there's our move, there's the retracement, extension, expansion tool put on, gives us a potential target level, which we got to after a leg and then a move down, and a second potential long entry on a key support area, because it's B and it's also 50% of that move. We'll come on to clustering in a minute. Level here, so resistance, support, and we bounced off it once, came back to it and bounced off it again, and rallied again to the expansion level, and actually got all the way to 261.8 levels as well. There's not many trades I know hang on for the 261 levels, but you know, they can play out, and they will have played out over the last few days, certainly on the US stock markets. Sorry, I just want to get rid of that's on the chart. Sorry, so that's the move up using the extension tool. So the extension tool can be applied at any time, but it's only used for targets, potential targets to the upside. But again, it can coincide with a strong moves. Downtrend, same thing. So there's our move, there's our extension move. So we've retraced. So the downtrend is there's the uptrend. The downtrend is this initial move. So our retracement is virtually all the way back to A. So A, B, C this time. There's the extension. There's the expansion tool, taking our extension to the 161.8 level. Potential target level. Again, it's similar pattern, isn't it? we have a first go, retrace, and then a second leg breaks down to that key zone, the 138 to 161.8 zone level, with the 50 to 61 levels providing the support areas, the potential entries for shorts here. And even, again, that's done, the target's now, it's over, but what's happened here is the market's moved back up. So what we got here is, trends within sort of a range in market, because we've got leg up, leg down, leg up, leg down, extended leg down. I would argue that's probably an extended, up to this point, this is very much still a downtrend. Then we had a very rapid and aggressive turnaround. So, we get these in these shorter time frames. Then a retracement, and then what looks like at this point, a continued expansion with this big, healthy candle here as this particular screenshot ends. So only, as I say, extension tool used for getting targets in both downtrends and uptrends. And this is just a blown up version of the previous slide. So there's our ABC, potential short positions here, potential target levels, the 138 to 160 zone, the 50 and the 61 key fib levels as entry levels, having put our expansion tool on here, and that worked out. We could have also played the same thing to the upside, moving higher there if you want to be quite particular about what I say. Expansion tools play out. Aussie, similar pattern, A, B, C, back to 50 and the 38 level, then we move back down to target level, and then we've continued to move lower in this one. So we've had a sort of a choppy move around. This is it's showing the fractal nature of markets. This is all the way. This is down at the hourly chart, so much more volatile. So although this looks like obviously from the screenshot, we're going from left to right. So we are trending lower. So we're looking to go short. We were through a zone of congestion here. Right, so it's just this up until this big candle here. We're in a very much a sort of congestion zone. So it's not really a trend as far as the fibs concerned. So we're using it to break out of the range. So the key 38, 50, 61 levels are in play, and it's only this corresponding huge down candle that breaks the range here. The range here we're talking about, and you could really extend it back to here as well, and breaks out. So that's a target level really would be both to the upside and to the downside, whether we're going to extend to the upside to 61 or 161 to the downside, which is what actually happens in this. And then it finds a new level, a new range on this particular chart. It's not a great example, that one, guys, but it's just showing the fractal nature of markets. And this, because this is the hourly chart, the previous one was the 4-hour chart, and previous one, that's the 4-hour chart within that, sort of relating to what we were saying yesterday. That's a 4-hour example, and this was there was a daily one earlier, wasn't there? This is and this is there was a daily chart, but we've got some more examples of that in a little while. Right, it's 10 to the hour. I'll keep where have I got to? Right, so yeah, that's extension tool those old slides are a bit messy. So finally, part 3. So I will run over a little bit over the hourly time frame, but part 3, we're talking about clustering and multiple retracement levels here. Okay, but again, all about support and resistance, potential entry levels, both going long and short. So these screenshots, these white ones here, are from my old Reuters screen, and the slides are from it's not a mentor. Is he a mentor? I'll probably point me as a mentor. A guy called Trevor Neal, who's a fellow of the Society of Technical Analysts in London. Really, really great guy. He runs a company called Alpha Trends. I can't remember his company off the name, but look him up. He's a really nice guy. He's a great teacher, and I hold him in great esteem. And so very kind regards to Trevor's slides here, or screenshots from Trevor's slides here. So I tip my hat to you, sir. Thank you very much. So finding clustering levels can get or feel a bit complicated, but you'd be amazed at how much confidence it then gives you. And the current trend in markets, this idea about price analysis and volume analysis and pivot points of control, sort of all sort of correlates to sort of potential fib levels as well. So what we're saying here is this happens to be the oil market back again, another old slide back from 2017, but that doesn't really matter. I'll say the beauty of Fibonacci is, it implied on all time frames, on all assets, and you'd be amazed how thorough and effective it can be. So here we got the last leg, if you like. We've had a move from down here at 45.50 all the way up to 49.50. So we've had a strong 400 pip move, $4 move in 4 or 5 days. So strong up leg. Then we've retraced, and then what's happened? So you can see there's our first movement. That's our last leg we've seen, isn't it? We don't know it's over until it's over, if you like. So hasn't really helped us in this case, has it? But here on whenever it is, the 11th of September 2017, it was that leg had clearly been bought back down. And where did it stall? Well, look where it stalled. It stalled at the 50% level of the initial move up. So $4 up, $2 back. It was all done in one day. You say, well, that doesn't really help us very much, which is fair enough. But you can see the same thing happening in the legs here. So that's fine. But so we're using this now to go forward. So that's our first fib level. Okay, so we've got our established levels, the 50 at 47.50, the 61 at 47.05. You can see that much clearly on this chart. Okay. So that's our key level as we go forward, this 47.05 to the 47.96 at the 38.2. Those are our three key levels around about, that $47 to $48 range. So that's fine. But so we're looking at clustering of levels. So the first one is fine. Trying to put the next ones on can be a wee bit more complicated. Okay, so we remember where we were before. We were here. This is September the 11th. We've finished 2017, which was here. So that was our first leg. Remember? So here, 27th to 11th. That's our first leg. So then what happens? Well, that's our first leg up, but it retraced quite significantly on that 11th, didn't it? But then, the next 4 days it gobbled up. So where's the next one? Well, we could try this level here. So we got another one with a floor of 46.9, and we went to where did we go to? We went all the way here, and then the next retracement. Sorry, hang on a minute. Where am I? Yeah. So that's our first. So that's the first one from the previous slide, the green one. Then we start the next level from here. So it takes us to our zero level is all the way up here, and then it retraces again. It runs over. So it can get a wee bit complicated. But what you can see here is you start getting the key levels coalescing or clustering at certain levels. So you can see here this 50 level is also clustering with the 61.8 level. So this makes this level here just above $59 at 49.23 a key cluster because it's 50% and it's a 61.8 of the next level. Similarly, and again, it's because of the way the calculations are worked out. But again, that's one of the, as I said at the beginning, some of the criticisms of Fibonacci levels is that they will start to cluster. But the closer the clustering, the more significant the level is. So this 49.25 level here has become key as the price the price action has moved to the upside as a support level. So our second retracement. The next level takes us to the 50% of the first move and 38% of the second move, still a key level. through here. So we got a key level here at 49.24, and the next one's here at 49.92 here. So this is our key level. And where do we retrace to? We've actually retraced to this first big support. So our big support is here and here. And if this holds, we might expect this to go to the upside. If this breaks, we could expect it to certainly come at least to this level and possibly down to this level. So these are just simple target levels. Again, you could have then just, clean that out and then put a clean, simple, well, that's the top now because we've been 4 days in. That's one single run. So we've got a single run now from here to here. Is this a B, and this is our C? This could be a time to put our extension tool on to see where we're going to bounce up and up somewhere off here, off the chart here. So, it can be a bit complicated, but you can see by doing it, say that the slides start to get looking a bit messy. But when you do it manually for yourself or automate it, you'll see these levels becoming clearer, so you can clean out lots of the other levels, which is another reason I don't use the 76.8 level. But there, so the cleaner level was this level we were talking about here, this 49.23 level, this 50 and 61.8, the key fib levels. This becomes key. So we've got two levels clustering together on two fib moves, and so that becomes, comes key as we move forward with it. So again, that was just simple retracement tools. Sorry, let's just go back to here first. That's an application of the daily time frame. Okay, obviously if you take this up, say the fibs can work on, or do work on, all time frames. So that's our daily time frame. Remember, we've looked at an hourly, we've looked at 4 hourly. This is the daily on this new slide. 4 hour, the weekly time frame, similar moves. It gets a bit more messy when you've got lower time frame levels on there, but you can see the clustering levels still becoming key, and as we've moved forward. So this is where we were when we started. We were down here, weren't we, at September 17, and so if we extend it forward, the move is coming much stronger, and again you can see the clustering levels coming key. So you got, so from a clustering point of view, sorry, again, there's a lot on this chart. I did say at the beginning there's a lot on these charts. From a clustering point of view, you want to be looking for the 50 and the 60 1.8 levels. They're the ones that when they start coinciding on different levels, that's key. 38.2 to a lesser degree as well, but certainly the 50, 60, 1.8, and to a lesser extent the 38.2 clustering with those are the combination of those three levels on multiple fib levels. So you can see here on the weekly chart, from we got that initial move down here, our first low here at 42, and the high of the entire run takes it to 72. So big, massive $30 rally from the second quarter of in a year, from the second quarter of 17 to the second quarter of 2018. Huge, obviously, move, but it's over a year. So that's our major trend, and then obviously then there's levels within that even on this weekly chart. So that's the next big level up. That's a level down, and that's the last leg up. If you can see what I'm saying there. So the last leg up was this one here so far, and we've come back into a previous cluster range as this chart is coming to has been produced in August 2018. So it's a clustering of the multiple fib levels, the 50, the 60, the 61.8 levels here, and also the lower levels, 23 points on other fib levels. So that's adding to the strength of the potential support that this is showing here over the last 3 weeks for the oil markets, but around about the $67 a barrel level. So there we go. I mean, let's say it's applicable I say that I did say the charts could get a bit messy, but it's applicable on all time frames, fib retracements. So you can start with a simple level, but you've got to have the. Sorry, I'm just using that as a. You've got to have a trend to have finished before you can start putting it on. So this is just another example. Same chart. It's not the same chart, but an hourly chart using the same thing. Obviously, it's more volatile, but you're looking for shorter moves and tighter stop losses. But you can still see that clustering level going on these fib levels. So we've got the bottom here and the top of the range is here. So that's the first level. We've pulled back to this. The second level is from here to here, and then third level is from here to here, as far as legs wise concerned. So there's multiple fib retracements on there, but you can see where they're all overlaying one another. So we've got the 61.8 and the 50 and the 38 of the original move. Then we got the 50 and the 38 of the second move, the 50 and 61 of the second move. So these levels, these key levels here, it's marked by the green arrows, become key. So we've rallied, retraced, but then broken through these key cluster levels here, and it's collapsed all the way back to where we started. And that's what can happen, obviously. So at this point, again, we were in this cluster here, this 0.75 to whatever this is, 0.7520 level. You know, I mean, this is just an hourly. Could be some fundamental news that's broken out, but that has broken out and it's pulled all the way back down. So fib levels, retracements, extensions, clusters can be used on multiple time frames, multiple assets, so hopefully I've rushed through that a wee bit to try and fit it to the hour. But if you want a bit more just on Fibonacci retracements, a bit more on clustering, a bit more on extension, let me know. I haven't actually got round to looking at other indicators with it, but as I said at the beginning, Fibonacci it's fascinated me from when I very first found out about it years and years ago. But the application of it on technical analysis just sort of really opened my eyes to it, and it's amazing just how it works and levels become relevant with other indicators right up to any particular chart. So let's just I'm going to say this is work, but current position we've got open on the end of day basis, the daily time frame. This is we were short this earlier today, weren't we? I don't know what's happened here. It's gone back to, it bounced? I think it must have EuroCAD. I think it was still open, wasn't it? What I'm trying to do here, just to, bring it right up to date. So on any chart, so it's we could have played with it here, but there's not. This is sort of much of a congestion zone, but you could have had, that's a level, isn't it? So that's a again left to right. So we've got a down range there. 1 to 0, the 50 level sits there, so we went down quite aggressively. We went and we came through the 38 quite quickly. Sorry, it's the fib, it's the key golden ratio playing out there. So, and again, but you can see how that 61.8, this green line here, happens. I literally put that. You saw me do that, didn't you? So it's not that's why I say the magic of Fibonacci, the art of Fibonacci. You can see how that has corresponded to those support levels going back here on the daily chart, going all the way back to August here on the EuroCAD. So support here, support there, and again, we don't know what is that number. Well, it's right on 149, and that just happens to be where it is. That's why, again, I always say, the round numbers are key. So 149,000 happens to be the 61.8 fib level of that particular leg down on the EuroCAD from November to December 2024. And, that's why I always say people think I don't make this stuff up. You just saw me do that. And moving forward, And moving forward, you can see how the 61, the golden ratio level of that leg move there, the November to December move, has been the pivot area that we've rotated through until we haven't. That sounds a bit naff, but we rotated through it. We went back to the top level. We've rotated through it, so we haven't gone to test the new low. We haven't gone under the 38.2 level, so that's provided a support level. So even that's the big. So this would still say this is saying this is in a potential downtrend, even though it's been sort of consolidating. The consolidation has gone on through January and February. We haven't broken out of the range. There's the top of the range again. We went back to test it here, and we haven't broken to the downside. So this is suggesting at the 38.2 retracement level holding that the potential is now to the upside, because the move lower that was bought back really quickly, wasn't it? If we zoom this in a bit, there we are. Let's move it forward to today. So move this. So the potential is to the upside, and what's actually happened is that the breakout has happened. Now it's obviously consolidated for a long time, but where did this stall? Well, we went to our extension level. We went to our 161.8 level, or the 1.61 level as it's got here from that level there. So eventually we got there, and what happened? We went a wee bit above it, but what's happened since? We've come back. We went down. But we haven't moved much lower. So we're now very much in an uptrend. And so that's the next big fib level. So if we put another fib level on this might be a bit cleaner, because it's that's the current daily fib range. Where does that fit with where we've been on the previous one? Well, we shall see in a minute. So that's our left to right. This is this was a down. Sorry, the first one here in November, December was a downtrend. And this current one is an uptrend. So, well, if it's going to extend, it's going to extend to the downside, but it doesn't seem to be, does it? Where's it holding? Well, it's holding at the first fib level. It's holding at 38.2, as if by magic. And as I say, I don't make this stuff up. And then you can see here that this is using fib and moving averages here. This is supported to the upside, because the 50 period moving average here is below the 50 fib level of this last move here from February the 10th to March the 11th, so a month move. We retraced, but we retraced to the 38.2. The 23 is probably around here. I've actually taken I should have said actually, sorry, I've deleted the 23 from my setup here on the Trade Locker platform, but you can see settings, also settings of the chart rather than settings of the fib level. So this is a simple fib retracement tool. It's there on your Trade Locker platform, and I've taken off the 23.6 level. I've taken that one off, and at 78, the 0.786 level also taken off. I've never used it. I know lots of platforms default to using it. I think the Trading View Trade Locker default is to use 78.6 as well. It's just something I don't do, so just bear that in mind. And as I say, you can, the extensions can go on and on and on, because it's simple maths and it goes on forever. So 4.23, 2.61, 3.618. It can go on and on and on. But let's keep it somewhat within reason. So anyway, what was I saying? I was saying about how key these fib levels can be and how self-fulfilling they can be, and that seems to be what's happening here on the this Euro CAD on the daily time frame. So it was this 38.2 fib level is providing key support at 154.25 support level. And I think that was a level where we went down to again today to support that, but I think we were actually short on this, so we're not using this. We're not using fib tools in our end of day analysis, although we do. It's not what created the short position from last night, and I think that might have. I can't remember. I'll have to look at it properly, but that may have stopped us out on the second half of that. Well, we had made 20 odd pips on that, but that's now moving up because we were short, weren't we? Target stop loss. I think that's. Yeah, it's gone back to a stop loss, so that's closed out the second half of that trade by looks things, but as it's retraced. But obviously that's intraday volatility. But you can see here, What this setup is telling us from the fib levels is that this 38 level is providing a key support level. So we've got buyers at 38, we've got buyers at the compounded by the 20-day moving average as well that's on there. So we've got strong support there. So we've seen buyers as this has come into this level here on the second here. We've bounced off it on the third. Obviously we were up on the fourth and fifth. Highly volatile, but again, 157.35. It happens to be the end of day high here. The spikes to the high. So again, it could be suggesting that we may be moving, giving up on moving into a new consolidation zone, which is probably what may be happening. Obviously, both the euro and the Canadian loonie are being massively impacted by the Trump tariffs, or the potential of the Trump tariffs as we move forward, the 9th of April being key. Right, it's nearly 1/4 the hour. I've been talking for over an hour and 15 minutes, so I'm going to wrap this up now, my friends. There was a lot to get through there. If we want some more detail on other fib tools like the arcs and the channels, let me know, and I'm happy to do a more advanced webinar on Fibonacci levels. But certainly everyone, in my view, should be at least using the fib retracement tool at least once in their trading career. Give it a go, guys. It's a phenomenal self-fulfilling tool. Often is its criticism, but it does work. Obviously, it doesn't work all the time. Nothing works all the time. But anyway, thank you for your time tonight, guys, or this morning, wherever you are in the world, I say. Fibonacci tools. Quick resume, my 3 all-time favorite trading books, 2 of my recent favorites over the last couple of years, Best Loser Wins, and Mastering the Mental Game of Trading, one by Steve Goldstein, one by Tom Hugard. Thoroughly recommend these books, and obviously thoroughly recommend thePropTrade.com. So if you're not with us, why not? There's all sorts of ways to getting started. Prop trading gets you going from a $5,000 account, and at the moment we got 25% discount off challenges. So it's going to take me to the sign up, isn't it? Sorry. Go back. Got the evaluation. There we are. Our phases. So most clients take the 2-step approach. Those in a bit of a rush try to take the 1-step approach. There's nothing wrong with that. It's what fits your personality. But the standard challenge on the 2-phase standard rows, as I say, 2-step, you can get a $5,000 account for $55. It's very well priced. And then if you put in SC 25, that'll get you 25% discount off that. We did have an Eid promotion, which is expired now. It's after the Eid holiday. That was Eid 30. That was getting you a 30% discount. But $5,000 account for less than $40. Give it a go, guys. Our most popular of these two here, the 25,000 and the 50,000 account. This is again with another 25% off. That gets you an account for under $50, $150, and the targets are there. Just trade in a risk management aware way, and the profits, the targets, profit targets can come along your way if you're trading in a sensible manner. Okay, try not to lose too much. 10% loss and it's all over, whether you're on 2-step or 1-step. But once you've proved the process of your trading approach, whether it's using Fibonacci, whether it's using moving average, whether it's using none of what we talked about tonight, you get to a funded account, you get your fee for whatever size account you've taken refunded. You get from at least 80% of any profits you make over the next when you're using the funded account, and that is real money. These are all obviously you pay real money to trade with simulated accounts. You're still trading with a simulated account on a funded account, but you generate real money, and it's real live feed. It's real liquidity providers live feeds from the live market. And it's real money that you make if you follow the process, if you follow your system, if you follow the rules and stick to the rules. There's no hidden rules in our platform. You know, there's no consistency rules. Do check the terms and conditions, obviously, but there's nothing untoward in there. I wouldn't be associated with these guys if that was the case. It's very straightforward. It's allowing, you know, people without the capital to get onto the trading world, and that's what the the whole prop trade industry has done, and we're trying to do it the best of the best at thePropTrade.com. So come and join us, guys. We're here to help. Any questions, please let us know either on our Discord group or directly via email, and we'll see you soon. Thank you, Katerina. We'll see you tomorrow, everyone. Take care. Tomorrow, I can't remember what I'm doing tomorrow, but tomorrow's another day, isn't it? Reciprocal trade tariffs, isn't it? Reciprocal. Anyway, don't get me started. Okay, guys. See you all tomorrow. Take care. Have fun, and may the trades and the props firms be with you. All the best, everyone. Bye-bye.